Good morning and welcome to Forex in Four. Today is Tuesday, November 1st, 2011. Alrighty, we're starting off in risk aversion mode here. Starting off with the euro because I'll just tell you about what's going on over there with the shenanigans taking place in Greece. We can see here we've had this sell-off starting since Sunday night here, and we've kind of gotten in this risk aversion mode here. We're beneath the daily pivot S1 support. All right, it looks like maybe we're trying to settle in around 136.80 here. What's happened that's changed what's going on? Well, we talked about, last week we know about the debt crisis deal, the devil's in the details, all these things, blah, blah, blah. Well, now as things are starting to move forward, things are changing a little bit that is, potentially going to derail this process. And one of the big things is that in Greece, the prime minister there announced that he was going to put this bailout vote to referendum and hold a confidence vote for Parliament. Well, that just throws a new monkey wrench in the whole plan, because what happens if the Greek people vote against this and they vote no confidence in Parliament, which means you have new elections. New elections take place, the new people come in, they say, we don't like this deal so much. Boom. Back to the same problems we have in Europe. This has been unexpected. It was announced yesterday afternoon, and I think the market was really a little bit taken aback by this whole move. I mean, at the end of the day, you're a politician, you make the decision, stick with it, holding referendums and confidence votes, because, if you do that every time you make an unpopular decision, all right, it could get ugly. And that's kind of what we're looking at here. The second thing that's happening is that European leaders, since the announcement of the deal, they've been courting China to try and help them, fund this EFSF bailout fund. And China's been saying all the wrong things so far, like, oh, don't expect us to bail you out, and all these other things, which means that they could have problems with the war chest that they need to try and stem the debt deal with being able to buy bonds and things. And Italy's yields are going higher now, all right, and it's the situation there is just about as unstable as it was before last week. So all the gains that we got for risk appetite have sort of been sold off here, and we're essentially back to where we started from prior to that. We'll just go back and look at it on a 2-hour chart. Okay, and you can see right here, all right, about 137, 136.90. That was about the top of the range from last week. I'll pull it back to the 4-hour chart. All right, and you can see that we'd sort of been in this range, and there's a little bit of support, maybe 136.50. All right, 136 and a quarter, something like that. But you can see here, very oversold, and it's possible that we may get a bounce here back up to this 137.50 level, but I'm not ready to dive in just yet. All right, so also adding to risk aversion in the markets. What's going on in Australia? All right, the RBA came out this morning and they actually lowered interest rates to 4.5%. And it's interesting because I saw that yesterday and I was a little bit confused by it, because you don't hear anybody talking about the RBA potentially lowering interest rates. I'm watching TV, I'm listening to all these currency pundits, and nobody mentioned it. In fact, I saw people that were recommending buying the Aussie, okay, because they said that the potential for the RBA to raise rates in the future was higher, and they actually decreased by 25 basis points, as I mentioned I saw yesterday. So that actually looks like it met the expectation, and that makes the Aussie currency a little bit less desirable. Now, bear in mind, it's still paying 4.5%, which is great for carry trades, okay, but 4.75% is obviously better. But one of the other things that we saw overnight was that China PMI manufacturing figures came out, and they came in worse than expected. All right, they're expecting 51.8. They came in at 50.4. All right, last month's reading was 51.2. All right, that shows a little bit of a slowdown there, which, taken into account with the Australian rate reduction, means that it's things are slowing over there in Asia. So you just have to kind of keep an eye on that. So we're looking here. We got risk aversion. I'm going to show you the S&P real quick. Okay, you can see S&P here has been falling. All right, since then we got about a 25 point drop here, and we're back to this 1220 level, which is going to be support. All right, we'll see gold is sold off. Let's look at oil. Oil sold off first, approaching 90 level. Okay, you can see it's a double bottom there. And then let's take a look at gold. All right, gold back to 1700, another little double bottom there. So it's possible that we're going to be putting in some support today, and we're going to move. There's not a ton of news happening here in the U.S. We're going to get ISM manufacturing numbers a little bit later this morning, and construction spending, but that's really it for us. Lastly, I want to look at the pound here. If you see the pound, they had their GDP figures that came in, and they came in better than expected. All right, GDP showing 0.5% growth. They were expecting 0.3 for the quarter and 0.4 for the year over year. So 0.5 is better than expected. And they have the government austerity taking place. All right, so that means that other areas of the economy are growing. All right, unfortunately, it's not in the PMI, showing up in the PMI manufacturing index. All right, which came in worse than expected, 47.4 versus 50. All right, index of services lower, 0.4 versus 0.5. So the economy there is slowing, but we've had this risk aversion overnight. It was the continued selling from yesterday. All right, I want to show you the Japanese yen. All right, you look at dollar yen, and it looks like it's holding in there right at about 78 on the intervention. But if you look at euro yen, all right, it doesn't look like anything's happening there. All right, and we're right back to where we started prior to the intervention, so just above 107. All right, and we can also look at pound yen, and you can see that that's pulled back a little bit as well, but not quite as much when it comes up. So there you go. So we're about halfway on pound yen as well. So that's kind of what we're looking at. Risk aversion in the markets. All right, overnight there's problems with Greece. And the euro thing still dragging on. All right, U.S. earnings coming in still pretty good, but nothing great. And then of course tomorrow we have FOMC, so we may sort of hang around these levels and wait and see. And I think Bernanke's going to come out and do whatever he can to try and juice these markets, because that's what he does. So we'll have to wait and see what happens. But that's really what we're looking at today. Risk aversion. We're going to see if we get a reversal today. All right, we may put in some bottoms here on some of these major items, and it's oil 90. All right, gold 1700, that sort of thing. We can look back and take a look at euro here and say, okay, euro around I don't know, say 137, 136.75 low. All right, maybe we have a little bit more to go, but I'm looking basically at this point probably to try and buy something at some point today, as it looks like a lot of the move from overnight's already happened. So that's what I'm looking at today, gang. Good trading to all.